There are definitely some myths about finance that are keeping you stuck. And we're going to cover off on 3 of them today in the Cash Flow Podcast. So welcome back. I'm glad to have you here. Let's dive right in. I'm going to start with a story. A CEO once told me, hey, we're really too small for a CFO. That's only for big companies. They were at about $5 million of revenue. I'm using an example here on the amount. But that's like saying, hey, I'm too young for brakes on my car, okay? A $5 million business who's trying to grow without financial clarity is a wreck waiting to happen. And yet, this myth, along with a couple others that we're going to go through today, are keeping way too many CEOs stuck right where they are, or worse, heading down a course that's going to lead them to bankruptcy or some kind of other financial trouble. So what's going on? The truth is, most CEOs, 95% of small business owners, as a matter of fact, don't really know what's coming next financially. They have bookkeepers that keep score. They're telling you what happened last month. Maybe you understand the reports. A lot of people tell me they just shove them in a drawer because they make no sense and they don't jive with how they think about their business. That's a whole nother problem we'll address. And that's useful anyway. Those reports are useful even if they do make sense, but it's history. CEOs don't just need history. You need headlights, just like we were talking about in the last episode. Circle back if you need to see it. But you need headlights shining 200 feet down that road so you can see what's coming. And without that forward-looking clarity, you're going to risk a whole bunch of things. Hiring too fast, overspending on marketing, maybe missing vendor renegotiations, not even bothering to look at software and how much you're spending on redundant software, blowing cash on things that don't matter, the old shiny object syndrome that I seem to have rather badly, just for the record. But the cost can become massive, and you can feel really rich on paper one week when you look at that bank balance, and then suddenly you're scrambling to cover payroll the next. And that's a reality I hear from so many people that I talk to, both in the Keep It Simple squad and with folks who call me to start getting one of our Cash Clarity deep dives. So here's what we want to do. We want to stop you looking in your rearview mirror while you're driving 80 miles an hour. We want to actually let you be looking out the front window with the rearview mirror in mind, right? But focusing forward. So you're going to miss the truck that's ahead of you, or you're going to take advantage of the shortcut that's ahead of you, okay? I'm going to give you a couple of different CEO stories, both real life, names changed to protect the innocent. In fact, I won't even use names. Both of them CEOs. One ran a $3 million business, relatively busy business, like there were a lot of transactions. So they had a bookkeeper. And every month they got their nice, neat set of reports, and it told them how much money they lost the prior month. Nothing about how to turn that around or deal with it the next month. It just told them how much they lost the prior month. So they kept making hires, thinking that was going to turn it around. They assumed the cash was going to get there. It had to get there because that's how the business runs, but it wasn't. They ended up having to drastically slash their staff and really reorganize the whole organization, including their debt, in order to survive. And they really ended up starting again at a lower level. Not a big deal. It was the right action to take, but they got into it because they really thought all they needed was a bookkeeper. Now, another CEO already had a fractional CFO and was doing great. Just really wanted to talk to me about how it was going. And that CFO did a great job. He put in first thing a rolling forecast for a quarter of cash flow. He was doing margin reviews. He made sure that they went through the pain, or that their bookkeeper went through the pain of fixing the books so that it could actually provide the information they needed to tell the story of their business. And that guy happened to also be in manufacturing industry just like the other CEO. And he really wanted to grow. He was at 10 million, he wanted to grow to be 20 million, okay? But he didn't have to panic at the end of each month. He didn't have to panic every day when he looked at his bank balance because he was looking forward. So instead of sweating that gray cloud, that Eeyore cloud hanging over him, he instead was deciding, I think I can do some good borrowing in the future to grow because I know I can afford the loan payment and I'll be able to grow a little faster. He could walk into any meeting with complete confidence, in any decision making with complete confidence in what was going to be happening down the road. And that's the difference between a bookkeeper and a CFO. And I got an example down here. It's going to help you take a couple steps to really make sure that you know what the myths are. Number one, that a bookkeeper's enough, or I don't need a CFO, and how you can make sure that you don't get trapped by those three myths, because they're out there, and it's fair that that you hear them. You don't know, you're not the geek like me who's spent 40 some years in a career of finance and gone through all the accounting courses and the CPA and all that business. Only a few oddballs like me tend to do that. But as a CEO, there are some things you can know about which of the stories you hear are real and which are myths. So, myth number one, only big companies need CFOs. This is exactly why I left corporate. I was a CFO in corporate, $300 million company, $1 billion company. And loved it. It was fantastic. And yes, they needed a CFO, and they needed the whole finance organization, and they needed that financial clarity and all of the things that go with it. But once we sold that company, and in between a couple of other jobs, I was working with some entrepreneurs and realized they didn't get that quality of service from anything out there for them that they could afford. So I knew that my new mission, and that's when I actually went into this work about 10 years ago, was to create that CFO-level insight, but for small businesses. So you didn't have to carry all of the bureaucracy and politics that it goes with in corporate, but we could take the essentials from what CFOs provide to the large businesses and provide them for small businesses without having to weigh them down too much, still being flexible enough to be able to move along. So here's the thing. You do need a CFO. If you're working in this $1 million to $5 million range, maybe just a fractional CFO. You may just need somebody to jump in and look with your books once with you for 30 days and give you an action plan. Who knows? But you don't want to go without that level of insight, especially if you want to make sure you're either going to maintain that $1 million with profit so you can maintain a lifestyle business, or if you want to really go ahead and grow your business. So that's the first myth. If you're at $1 million, you probably need a CFO. Now, the next myth is that and I hear this so many times whenever I talk to people about finance. Oh, I have a bookkeeper, or I have an accountant. And I'm going to go right back to the story that I told. Bookkeepers and accountants are great. Bookkeepers are looking at the past. Tax accountants, you've heard me say this before, are looking at the present. And what will happen is a tax accountant will call you on April 15th and say, you need to write me a check for $100,000 to send the IRS, or you need to write the IRS a check for $100,000. And you're like, what the heck happened? Because tax accountants and bookkeepers don't help you manage that largest expense your business is ever going to have once you're profitable. It is the biggest expense that all CEOs ignore, and it's the tax bill until they're hit the first time, and then they take it pretty seriously and understand that not only do you have to be paying taxes on last year's income, but you now have to start paying taxes on this year's income. And what will happen is bookkeepers and tax accountants are not going to help you look at that. Bookkeeper's going to tell you what happened last month. Tax accountant's going to tell you what you owe right now. So if you're only looking backwards, or if you're only looking right inside the car, which is what those two things are doing, you're headed for a crash. So that's myth number two, is that a bookkeeper and a tax accountant is enough. So that, go back to number one, repeat at number one. You probably need a CFO, even if it's only for a 30-day deep dive in order to really figure out what's on your horizon. Myth number three is that you need a full-time CFO. That if you're a business that's $1 million or higher, or $5 million or higher, you need a full-time CFO. Full-time CFOs are expensive. By the time I left, they were really expensive. And the truth of the matter is that the outcomes matter more than how many hours your CFO puts in. And I'll tell you, all my models are priced on the outcomes. None of it's priced on how many hours I put in, because that varies wildly from month to month and from client to client. The bottom line is that you want a fractional CFO or a part-time CFO or somebody giving you a 30-day cash flow clarity intensive. You want to know that whatever you're paying, you're going to make that money back and get some return on it. And that's what actually matters. So you don't have to pay $300,000, $350,000 for a full-time CFO. There are plenty of good fractional CFOs out there. Heads up and alert, there are plenty of really crappy CFOs out there. There are bookkeepers that take a QuickBooks intensive course and call themselves CFOs. There are CFOs out of corporate that cannot speak entrepreneur speak. Those are kind of the two extremes. The overqualified and can't understand how entrepreneurs work, because y'all are crazy. I know that, which is why I love working with you. But they don't get it. They try and force you into that $300 million corporate mold. Or you've got the bookkeepers or the ex-controllers or whatever that slap a sign on their website that says, hey, I'm a CFO. They're not a CFO. A CFO has at least 10 years of experience doing CFO work, the kind of CFO that you want giving you advice in your small business. So that's just a heads up. And I know a ton of really good ones out there. So you're not spitting in the dark. There are very good CFOs out there. You just need to ask some very clarifying questions to make sure you rule out the bookkeepers that think they're CFOs and you rule out the corporate CFOs who've retired and just can't adapt. Okay? So, bust all three of these myths. 1, only big companies need CFOs. 2, that you're just fine with a bookkeeper and accountant. 3, that you have to have a full-time CFO in order to make it count. They're all gone. If you bust those 3 myths, you're going to immediately create leverage in your business. You're going to stop reacting and be able to start anticipating. So what can you do about this right now? I like to always end these episodes with an action plan for you. So what I would do, first of all, if you have a bookkeeper, is ask your bookkeeper for a forward-looking 13-week cash flow forecast. That's simple. Just say, hey, when you send me the financials this month, send me a forward-looking 13-week cash flow forecast. All that data is available to them, right? They can see how much money you're actually spending and when. They can see how much money you're actually getting in and when. If they can't provide you that, that's a pretty good hint that you need some CFO-level insight now. Whether it's to help that bookkeeper learn how to do it or to teach you how to do it yourself. Great episode last week on how to do that 13-week cash flow forecast. You don't even need an Excel spreadsheet. You just need a calendar and your bank statement. It's that easy. Take you an hour to get a cash flow forecast, which is exactly what your bookkeeper should be doing on your behalf, especially if you ask him for it. The second one is I want you to write down, this is a journaling exercise, your top 3 financial worries. So in some cases it's, do I have enough runway if all of my revenue disappeared tomorrow? In some cases it's a mindset thing you're trying to get over. In some cases you're worried about your pricing. In some cases you're worried about the industry changing and your ability to get clients going away. In some cases it's how much you're spending on expenses or headcount and whether or not you could hire people. Whatever's keeping you up at night, write them down, the 3 of them. When you write those 3 things down, I can pretty much guarantee you those are going to be CFO issues. If you're in $1 million business and above, those are going to be CFO issues that you can get clarity on without a full-time CFO. But then, even without even a part-time CFO, once you have that list, block out 90 minutes this coming week and review your financials with the future in mind. So take those financials that your bookkeeper is giving you and now think about the future. Hop back to the episode before this and get a little information on how to do a cash flow forecast, because that's really, really easy with just a calendar and a bank statement. But pretty much you're going to look at your upcoming payroll, taxes, your vendor payments, when money's coming in, and you're going to start to spot some gaps before emergencies. So even if you don't jump into a CFO job right now or CFO hire right now, fractional CFO, do this work yourself. You can, and it's very straightforward to do, and it's really a necessity for any CEO that wants their business to survive. It's also why I've built the Cash Clarity Intensive, which is a 30-day sprint that walks through this exercise with you and gives you CFO-level clarity related very specifically to your business. Basically, we sit down together in a one-on-one, then we go through 30 days together, and you walk away with the visibility, a cash map, and the momentum towards any of the goals you have in your business. It's like just putting the CFO brakes in the car. You'll then be able to use them on an ongoing basis. So, if this episode gave you kind of a shift in perspective on those 3 finance myths, do me a favor. Hit subscribe, hit like. Most importantly, share it with any other CEOs you know that might find value from this, because it's not a big exercise I gave you. You can even chop that 90 minutes down to 60 minutes. But your business deserves it. You deserve it. And I really want to see you succeed. So I hope this has been helpful. Ping us with any questions you have in the comments, and we'll be sure to address them in a future episode. In the meantime, this is Pam Prior with Cash Flow Forecast, signing off for the week. We'll see you next time.